Hi, my name's Tom Elliot and welcome to the first of my financial market updates for 2015 for Hodges Real Estate. Well, the property market has awoken from its summer slumber, as it always does once January slides into February, slides into March. And the good news for property investors is the clearance rates remain resolutely above the 75% level around Melbourne. Of course, this varies from suburb, region to region, but buyers are still very, very strong at auctions. Now, a couple of important things have happened. Firstly, the Reserve Bank last month decided to cut interest rates from 2.5% to 2.25%. This is obviously good news for the property market. In fact, it's good news for most asset classes because cheaper finance generally means higher prices. However, there is a slight sting in the tail. If the Reserve Bank is cutting rates, it is because they see some economic problems on the horizon. Now, whether it's rising unemployment or static wages growth or a reduction in the mining boom, in fact the mining boom is probably pretty much over by now, is very hard to tell. The Reserve Bank really gives us too much detail. The other bit of news on this, which is important to note, is that these sorts of rate cuts rarely come just once. I think the Reserve Bank will cut again before June and we'll see official interest rates at 2% and possibly below before the end of this calendar year. Secondly, the share market is rocketing at the moment, again because of rate cuts, but also because of optimism about things, the share market is going up. Now, it's important to note that the types of shares that are going up the most are dividend stocks like the banks, like Telstra, like Transurban. Again, these are going up for the same reason that property is going up, because interest rates are going down. In contrast, mining and oil and gas stocks have had a terrible time recently as commodity prices declined precipitously from their highs of just a year or two ago. Another important aspect of the property market, which could alter the landscape a little bit in 2015 and 2016, is the new rules by the Reserve Bank via the federal government for extra fees on foreign property buyers. Now, the legislation has not yet been passed by Parliament, but the idea is that for the first $1 million of a property, foreign buyers will have to pay a fee to the Foreign Investment Review Board of $5,000. The next $1 million is $10,000, and every $1 million of value beyond that, another $10,000. So what this means, if a foreign buyer buys a $3 million house in Melbourne's eastern suburbs, they'll pay $25,000 in fees to the Foreign Investment Review Board, and on top of that, they'll pay stamp duty to the state government of Victoria of around about $150,000. Having said that, I don't think this extra fee will do anything to deter foreign buyers from our market. All right, that's it for another month. Thank you very much for your company. And remember, if you are looking at either buying or selling, be it for a home or an investment property, don't hesitate to contact your nearest Hodges office. Their assistance can only be of value to the whole process. Go to hodges.com.au.